Hi everybody and welcome to the weekly Forex update with myself, Kathleen Brooks, Research Director here at Forex.com for the week beginning Sunday, the 10th of March 2013. Well, it was a really pivotal week last week. We had an awful lot of economic data, big fundamental news coming from the central banks in Europe, the UK and elsewhere. And we also had some big technical moves, which I'm going to talk about. But there's a few themes developing as we start a new week. Firstly, those record highs in stock markets, they have been maintained. But what's also interesting about this is that the dollar has also started to rise. Now, we've really much more bearish environment for euro dollar. Well, he's kind of reversed course here and suggested that his message was fairly upbeat, suggesting that the economy in the Eurozone needs to get worse before they'll do anything. Now, what does that mean for euro? Over the next few days, it could mean euro dollar strength, and euro dollar could stay above 130 for a bit longer than we thought. Now, there is obviously not as much key economic data coming out of the Eurozone next week. Remember, the first week of the month is always where the bulk of it does come out. But really, watch any economic data that comes out. Also, watch any ECB speakers to see how they interpret that data and what they think going forward. But as you can see with euro dollar, this is the daily chart, managed to stay above that 130 level. We've also got 131.65. Keep that in your mind. That is a resistance level of note. It's the base of the daily Ichimoku cloud. And above there, 132.20. Remember, that was quite good support on the way down. Well, now it's resistance on the way back up. So we're not looking for a massive rebound or a change in trend in euro dollar, but we do tend to think that it will that it could be due a bit of a pullback, even though gains may be quite shallow. Now, the other big mover last week was dollar yen. That was a really pivotal move. Everyone was concentrating on euro and the pound, but what we actually saw was dollar yen make a very significant technical break, which really sets the scene for further gains as we go through this week and also into next week. Here is the weekly chart. We are at a 2009 high in dollar yen. This is significant, really significant. That break above 95.50, a weekly close above there will also be a very bullish development for this cross. But even if we do pull back, we may get back. There's very good support, 94.80 and then 94.50. Ahead of kind of 93.90. So there's an awful lot of support on the way down. And what we've seen with dollar yen, now you can't see it in this chart too much because it's too long term, but basically we based for a very long time, for most of the last month. Now, the longer you base, the more space. So there could be that moving sideways in dollar yen that we've seen in recent weeks could have flushed out week longs and actually helped prepare the ground, if you like, for dollar yen to really make a significant break to 100. Now, remember, we had the Bank of Japan meeting last week. They didn't do anything. But as we move closer to April, we're going to get the new governor, Kuroda, coming in. He is expected to usher in an unprecedented level of monetary easing. Now, there will be a lot of people expecting him to do that straight away. So there's a lot of pressure on him to enact this kind of dovish mentality at the Bank of Japan. So basically, as we think that as we lead up to that, we could see further yen weakness and the dollar just gaining strength as it becomes more of a growth currency and moves along the lines of stocks. And since stocks are still making record highs in the US, that is good news for the dollar. So lots to digest as we start a new week. Good luck trading this week, and please do join us next week for more. Thank you.